Good morning. Good morning. Hope everyone out there has had a good trading week so far, an excellent holiday break. Happy New Year to you. We'll be getting going in just a minute here. And of course, as always, if anyone has any questions along the way, please do ask. I'll be getting to them as soon as I can. Welcome, folks, to this week's edition of Back to the Futures with me, Markets and Mayhem. We're going to be talking about what's going on in a number of different markets, including the stock market, gold, silver, and Bitcoin. And then we're going to be zooming in and looking at some of the intraday price action and some of the same. And also, whatever you all may request out there, I'm certainly open to look at charts for different stocks, ETFs, futures contracts that you're looking at as well. Happy New Year to you, low key. And a quick disclaimer, and the biggest thing to take away is don't risk more than you're willing to lose. I talk about this every week because it's important that you manage your risk first and foremost. What I said last night was don't trade for the U in 10 days, trade for the U in 10 years. And I still think that's a really important takeaway here. And give me just 1 second. There we go. And, I think also with trading, it's really important to treat it like a business. At the end of the day, we're buying and selling inventory, whatever we're buying, whether it's futures, stocks, ETFs, it's all inventory. We're hoping to capture a positive spread. The point of that is that if you're buying, you want to be able to sell for more. If you're selling, you want to be able to buy it back for less. That's the spread. That's what we're hoping to achieve. We don't need to dress it up. We don't need to turn it into something it's not that prompts all kinds of emotional responses, which can get us into trouble. Just treat it like a business. That's it. Once you start getting into that mindset, expectations shift because with a business you want to keep your doors open, right? You want to make sure you're there to serve your customers the next day, next week, next year. Well, in this case, you're your own customer, you're eating your own cooking, and in order to keep the door open, that liquidity in your portfolio has to be abundant enough that you can take the next trade. So what's an easy way to make sure you can keep liquidity in your portfolio? You manage your risk. You don't put too much at risk on any single trade. It's that simple. And it sounds boring because I know that the adrenaline rush seeking folks will be like, but, how am I going to make that huge 100x trade if I'm managing my risk carefully? You can still get those kinds of trades, but you're more likely to stay in them if you have the confidence and if you aren't being shaken about by every little bit of change or volatility. That is to say, if the portfolio that you have right now is keeping you up at night, if you've got to watch every single tick, you're in too much. So reduce risk, manage risk, start with a plan before you execute even a single trade so that you know where your entry is, where your exit is, what your thesis is, what you're watching to guide that thesis. Keep it objective and systematic, and you'll keep yourself out of trouble more often than not. A little bit about me. I unbelievably started this journey over 20 years ago now. I started investing in 2006. So 20 years of investing. The year just shifted over to 2026. So it's now just about 21 years of trading. So I'm dating myself. The trader in me is now of legal drinking age. But no, in all seriousness, I really think that one of the things that's kept me hungry is wanting to learn, wanting to improve, enjoying the process. And there's a great book called The Practicing Mind that I suggest folks check out. It's all about process-oriented thinking. It's all about improving the processes that we do day in and day out. Often is the case, we get into the mindset of, I just want this to be done. Or, I just want to kind of get through this. And so we don't focus and we don't necessarily do the best job we can. But if we become more process oriented, our mindset is going to become more like, how can I do this better each time I do it? Think about how you can apply that to trading, to investing, to building systems that you can trade off of. All of these things are interconnected. So let's dive into some charts. I've got some cool stuff to share with you all today before the market opens. And we do have a somewhat interesting trading day. We're going to get PMIs this morning, services PMI final at 9:45 a.m. We'll also get US S&P composite PMI final at 9:45 a.m. Trump will be speaking at a GOP event at 10 a.m. NVIDIA's Jensen Huang at CS now 1 p.m. he'll be speaking there, and then a policy meeting at 2:30 p.m. with Trump. So potential for headlines today, potential for some risk to be realized. We'll certainly be watching closely to see how these headlines get processed by the markets. But this is a big week for the labor market. And that's the one thing I wanted to just quickly touch on before we get to the charts. We've got JOLTS tomorrow. We've got non-farm payrolls and unemployment on Friday. Say what you will about the data, it can still move the market. So it's something we're going to want to pay careful attention to as we get into the rest of this week. Got a chart of the S&P 500 on screen, and what do we see here? Well, if my eyes aren't playing tricks on me, it looks like we're starting to pop through the top of this range again. And I think we may be on our way to S&P, index S&P, not futures S&P, but index S&P 7,000. And the reason I say that is you're seeing the options activity rolling higher, even at strikes above 7,000. So you're seeing these desks go to 7,100, 7,200, 7,300. They're starting to roll up their exposure. What that tells you is you're starting to see more confidence in higher prices that eventually will break that wall of calls at 7,000 and roll higher. This break above this trading range that we've been in for so long further suggests that. One of the things I talked about yesterday when I was writing a note to Traderade members was really would like to see us get out of this range. I do think we'll break out to the upside, but either way, we've got to respect it because we've been consolidating for the most part since October, which tells you that ultimately when we do resolve this consolidation, it's likely to be a bigger move. And the reason for that is the longer you consolidate, the more it's like a coiled spring that's building up energy. That energy is going to be released. And that is the longer you consolidate, the more of that release of energy can lead to a larger move. So that's where my mind is on watching the consolidation that we've had in the S&P. It reminds me of the consolidations we've seen in things like gold, which would eventually lead to these big breakouts. So overall, I like the S&P more than I like the NASDAQ. We've seen a rotation into financials, into industrials, into other areas outside of tech, the rally is broadening. And by the way, that's very healthy. To have the same leadership, the same narrow leadership, just continue to march forward with valuations that are a little bit disconcerting versus seeing the market broaden out more and actually have a much wider amount of participation, I'd rather see the latter. That suggests there's more staying power. That also suggests the risks are being distributed more to what could bring the market down from just tech to many different parts of the market. Speaking of tech, here's the NASDAQ. What do you see? What I see is tech still cannot break above this uptrend line. And that is not what you want to see here if you're bullish of tech. Now, that doesn't mean I'm bearish of tech. I'm more neutral at the moment, wanting to see this resolve positively. As I said, I'm more bullish on the S&P because we've got this broadening expansion of participation in the rally versus tech that's more kind of chopping sideways here. And if we look at tech over the last month, that's really all it's done. Certainly, it's well off its November lows, so that's encouraging for the bulls. We do have more talk of the AI super cycle coming out of CES. Whether or not we're going to subscribe to that at face value is a whole other matter altogether. But at the end of the day, tech is taking a bit of a breather, and that's fine. The rally's broadening out. The NASDAQ, for me, I'm not super interested in long swings until we can recapture this trend line. Now, let's take a look at what we've all been talking about really over the last year, and that's gold. Now, some would look at this pattern and say, geez, it looks like a bear flag is forming, and it does technically look that way. But I think, once again, it's going to surprise people and move up a lot. I think this quarter, gold gets to $5,000 an ounce. I think that at the end of the day, you have the best backdrop possible for precious metals right now. On the one hand, you've got expansion of fiscal policy. On the other hand, you've got monetary easing and so-called not QE, in big quotes, where they're injecting 40 billion plus into the short end of the Treasury market, and that's the Fed. Then you also have the unofficial trade policy of the government being, hey, let's weaken the dollar to make our exports more attractive. Then adding to all of these things, this sort of cauldron of the witch's brew for gold, you also have increasing geopolitical uncertainty and economic uncertainty. On the geopolitical side, well, hey, we just went into Venezuela, and there's talk of other conflicts around the region. And on the economic side, we're seeing more signs that labor is weakening and starting to roll over. So what does that all tell us? Those key ingredients that gold and to a lesser extent silver really like, they're even more powerful in 2026 than they were in 2025. So we've had this bit of a shakeout. You can see that shakeout event that happened from the recent highs. A lot of folks got pushed out of their options. And so one of the things we've been watching very closely is what's called volatility skew. And the long and short of it is that when people get way too excited about a certain direction, in this case, it was up, they tend to pile into one side of the trade, in this case, calls. That call volatility, or the premium that people are paying for calls, was getting much more expensive than what people are paying for puts, to an extent that it suggested that even if gold moved sideways, that lopsided skew could pull price down because you've got more and more time decay. And as that price goes down, you've got more of those options moving out of the money. And that also removes the need for dealers to hedge as much delta. So you kind of have the perfect storm, even if things were consolidating, for there to be pressure. But we got pressure on top of pressure instead. We had a real sell. So that options imbalance helped to accelerate that sell, not just in gold, but in silver and platinum and palladium and copper, but mostly gold and silver. And now we've reset that skew. So now we're kind of back at the point where we've shaken the tree. A lot of the speculators have had to kind of take their lumps, get stopped out, and now they're likely to have to buy in at higher prices. And this is simply how uptrends work. So we're back in a sweet spot for gold. And while this chart might look a little bear flaggy, or at the very least look like a channel, I think we get back to the upside, break out from it, and continue to move higher because all the catalysts for gold are there and they're all still firing. Let's take a look at silver as well. Silver, one of the things that we've talked about is wanting to see consolidation or a correction because it was becoming extraordinarily parabolic, and I don't like parabolic moves. They tend to end really badly if we don't get some kind of consolidation or correction. Well, guess what? We got a little bit of that. We got kind of a combination of the two. It's like a volatile consolidation period with a bit of corrective selling. Not quite a full correction, but, pretty darn close. And what I liked about this move in silver was it shook out that lopsided skew as well. Now, in both gold and silver, we're not seeing positioning yet in the commitment of traders that suggests mania or anything of the sort. So it's really just on the options side. Even in the ETF flows, we're still not seeing those kind of mania levels. So we just needed to shake the tree, get some of the specs out. That's been done in gold and silver. They both are set to move higher. And this is something I've been adamant about on the Traderade Discord. I've been talking about it on social media. I've been talking about it on these streams that I just don't think this run is done. And as long as there's lots of new money creation, high deficit spending, interest rates on a path lower from where they are, and more liquidity being injected into the system, that's juice for gold and silver. It's also, we'll talk about this in a moment, going to start helping Bitcoin in a big way. But for now, we've got all the ingredients we need, and then the uncertainty is the catalyst. That economic and geopolitical uncertainty is the catalyst that has more of that liquidity seeking safety in places like gold and, to a lesser extent, but still very relevant, silver. And I say to a lesser extent because it's also an industrial metal. Unlike gold, most of silver's demand is industrial in nature, and we're seeing that pick up for batteries, for solar, for military projects, for AI projects. So silver is the best conductor in the world. It's got a lot of uses in a world where technology is moving forward. Let's talk a little bit about Bitcoin. Been looking at this trading range for a while, right? This has been the chart that I've been sharing, I guess at this point, for at least a month and a half. And we finally had a nice strong reaction off the bottom of this range. We've had a few before. This time is starting to feel like maybe Bitcoin is pricing in the liquidity that's starting to come in to the financial system. And so for a while, we had seen the reverse repo market dropping. We had seen bank reserves dropping. We'd seen just signs of near-term liquidity drying up. Now we're starting to see the opposite. Now we're seeing signs that in actuality, liquidity is going to become more ample. So financial conditions had never really tightened much, which is good as a backdrop. For now, we have the Fed injecting 40 billion plus in liquidity. You see their balance sheet now expanding. They're not calling it QE, but the impact is liquefying the financial system, which is exactly what you want to see if you're betting on something like Bitcoin, which I look at as a relief valve for excess speculative liquidity. So if there's more liquidity around, guess what can get a bid? Things like Bitcoin can certainly become more attractive in that environment. So I do think we're starting to put in a bottom, and as long as policy remains accommodative, we could get back to the top of this trading range around 102,000 on Bitcoin. So that's pretty interesting stuff. We've got some areas to look at for opportunity, continued upside in the S&P, continued upside in gold and silver, potential for Bitcoin to run to the top of this range. NASDAQ may be on the do not touch list for now until it resumes its uptrend, or at least gives us some reaction up there. If it rejects there, it offers a short as well. And then here are some of the actionable levels that we're watching. These are the weekly pivots. I'm going to take a screenshot of this and share it out on social so you can reference it later. I post this to start the trading week on the Discord, on the Traderade Discord, so everyone's able to see that as well, along with some notes on what I see in the market. So just posting that over on X right now, and then we're going to dive into Bookmap and look at how the markets were trading overnight. And so on screen, we've got a chart of the S&P 500 futures, and we're going to dive in a little bit to the overnight price action, what we saw leading into pre-market today. And folks, if you have any questions while we're going over everything, let me know. So first, we'll zoom out just a bit here. So overnight actually did see some volatility, and looks like we had a bit of a swoon as the European session started out. Just going back through the headlines here. Don't see a lot to attribute to it going back through the headlines from last night, but it definitely looks like there was a sell program that was in effect for quite a little while there. Brought us down to a new overnight low. And we were able to bounce off that. We started to see a little bit more buyer aggression coming in just around, I'd say, around 5 a.m., 4:45 a.m. You see that big delta candle. You see some of that up here. Sellers absorbed that flow, but it wasn't enough to deter buyers from making another push and getting us back up to the point of control, testing that, seeing some iceberg selling up there, and then dropping back down. Let's take a look at gold in the overnight as well. So kind of a similar look. You had that big drop a little bit later than the equity markets. But overall, gold climbed right back up. So it kind of suggests there's a bit of a better bid in gold here, at least at the moment. Which has been a theme. I guess you could say that's been a theme for several months now, where gold is just the place to go. That's where there's some fun volatility to trade. That's where there's been a really well-defined uptrend. And quite frankly, I know a lot of folks that have been equity futures traders that have pivoted to trading gold and silver much more over the last 6 months because it's just been, let's be honest about it, it's been a fun market, a more fun market to trade. And I think those fireworks will continue into today's tape as well. Silver overnight. Pretty similar look, although silver is just rocketing this morning. Look at this thing go. From about 8:30 a.m., we've just seen silver getting back close to its all-time highs. And one thing about silver you've got to really take into consideration, this is a thin market. So the order book is really bid heavy right now. On top, on the offers, you got 1.4 thousand. On bottom, on the bids, you've got 3.7 thousand. The delta right here, 2.2 thousand between the bid and offer. It's a bid heavy book, which kind of gives you a sense that there's just more demand than supply, more than 2 to 1. So that's also a kind of healthy sign that tells you dips are to be bought in a tape like this. As long as there's that imbalance between supply and demand, you kind of want to be getting long into dips on this thing. And let me just make sure. Yeah, so that was set to, we're going to just want to make sure that our times for all these start at 9:30 for these price ranges, since we're going to be using these to also help to delegate the opening range. I've noticed that sometimes the price level thing will get shifted around, but it's pretty darn easy to shift it back. And I do recommend just doing periodic sanity checks on any software you use for trading. When there's updates or otherwise, settings can get kind of jumbled around. And so to make sure it's performing as you would expect, it's always good to check those settings. periodically. And we have just about 7 minutes left until the opening bell. And a reminder, we've got US S&P Services PMI final coming in at 9:45 a.m. Eastern with a forecast of 52.9. That's really going to be the most important market moving event. And I say market moving because if it does come in with a strong deviation away from the expectations, it could move price. The rest of the stuff on the calendar today, probably not too much of a market mover. We've got Trump speaking at a GOP event at 10 a.m. NVIDIA's CEO Jensen Huang speaking at CES at 1 p.m. and then Trump participating in a policy meeting at 2:30 p.m. I've noticed the market's response function to things that Trump is saying has been reduced significantly over the last just about year as well. So it's just important. I remember when we first were parsing what he was putting out there, what he was saying the market would be extraordinarily volatile. Seems like that law of diminishing returns has helped to reduce that volatility. And maybe to some degree, the market doesn't always buy things at face value, which is probably a good thing. See if we can take a look at what's going on in the pre-market here. All right, I'm going to share a chart of the pre-market activity from FinViz here. And we can see that we've got a decent little bid in the semis and NVIDIA. Some of that from the excitement from CES yesterday. One thing that's kind of interesting if you're a gamer, NVIDIA did not announce any new video cards for this year. And they even nixed the idea of the Super Series for the 5,000 cards. So there was this speculation last year that there were going to be new Super Series video cards with additional VRAM, potentially even jacked up ROPs, so they'd be, basically a little more powerful for rendering. And those rumors were quashed once and for all at CES, and presumably because of two things that are related. One of them is the shortage of memory. There's just not a lot of high-speed memory. The high-speed memory that does exist is largely being bought up by data centers for these generative AI projects. And that's the other thing is generative AI has become NVIDIA's focus because it's such a big part of how they make money. They're really just not as concerned about making graphics cards for gamers anymore, which, it's unfortunate. As a gamer myself, I would love to see AMD, NVIDIA, even Intel shaking things up, building even more modern tech. But on the other side of it, I understand they're a business and they're making the best margins in AI. And that's really where all the growth is happening. So why not focus there? But, a little bit bittersweet. We're seeing this from Micron as well, who's also on the heat map with a decent bid. Um, they've phased out their consumer memory completely. So they've actually said they're going to shut down their Crucial division and really focus on data center sales as well. So nevertheless, that area of the market getting a bid pre-market today. We did see some rotation yesterday out of utilities and into financials. Financials a little red pre-market here. We'll be watching those in today's tape as well to see if any of these rotational flows continue into this week. This really, they say January helps to take a temperature of how the trading year may go. So it is worth watching how we open up, which areas are in favor, and how the narrative really starts to take shape for 2026. And let's quickly also look at the futures heat map here. A lot of green in the metals. Silver bid up over, well, right now it's bid up over 3%. This is just a little bit delayed. Platinum up over 3%. Copper breaking the $6 handle. Wow. That's a pretty big move for copper there. A lot of the industrial metals usage is starting to pick up as well. Palladium back on the run. It had gotten up to our 2000 target and then some, and seen a really hard sell around those supply levels. It's starting to look like it wants to get back up there, challenge those levels again. And what's interesting, like, let's just quickly take a look at silver ahead of the market open. You can see this is the commitment of traders. This is the amount of long positioning, everything above zero. It's pretty flat. And if we zoom out even more, you can see that throughout this run, there was more interest than there is now. So you've seen a lot of positions taken off. I think part of this is also the miners starting to sell forward production. So that's bringing down the aggregate long exposure, because what they essentially do is they'll sell short because they have the product to deliver. So they're locking in prices today for product they can't deliver until later. So I think that's part of what we're seeing here. But the overall takeaway is, yeah, this move is insane, but the positioning is not. And so if you're bullish of precious metals, that's exactly what you want to see. And opening bell in just about 30 seconds here. Getting a bit of a bid. S&P making a push above the point of control as we approach the opening bell. Bell has rung. Bit of a sell side imbalance for the market on open, but I don't tend to put a lot of stock in those. We can see where the supply and demand is right on screen. And so far, buyers are showing some pretty strong interest in getting long here. We're going to zoom in just a wee bit more to this open. And it kind of, at least so far, goes along with what we were talking about, breaking above that range. There should be some continuation here up to SPX 7000, which should give us, about 90 handles or so to explore to the upside until we get to that point. Not saying that's all going to happen today, but this week, certainly possible. Got a question from Loki. Thoughts on NVIDIA in general? So I think the management has done a really good job keeping expectations guided pretty constructively. And what I mean is they've hyped up the new series of processors they're going to be building. They say they're in production, the Rubin series, and should be available to ship out later this year. And they're claiming that it has a significant reduction in training time, that parallelized batching, or basically being able to serve multiple users, that has increased markedly. We also know, however, this is a company that sometimes tends to exaggerate a bit. So I'd really like to see the actual benchmarks and what people say when they get their hands on the tech. But overall, Rubin looks like it's going to be a pretty strong GPU offering. And what's kind of surprising is they're not making any video cards for gamers from that new GPU, which it seems like it's much more focused on AI. So maybe that's the reason. Maybe there's not as much improvement in the performance metrics for gaming on that. But I could see how the data center customers that are interested in Gen AI would be pretty excited about this, because you're essentially getting one chip that, according to NVIDIA, should be able to do the job of many. And that's sort of been a trend, that 1-year cadence where they are still innovating. The downside, of course, is that software generally takes a while to catch up. I have Blackwell GPUs, and I'm still waiting for full NVPF4 support on those. So, or FP4 support on those. So we'll see how long it takes for the software build out for Rubin to really take hold, but probably going to be about 9 to 10 months, which could, to some degree, limit the amount of orders we see until that full support comes in and you really get to see those gains from the benchmarks. But what we have, and I'm setting this all up for a backdrop, we have a shortage of hardware. We have a shortage of memory. We have a shortage of processors. That's becoming a problem that could last for at least another year and a half. So I think the other thing that favors NVIDIA here is the presumption of a shortage, probably causing folks to want to order when they can, like when they have the cash or they can raise the capital for a number of different types of hardware, to include memory, processors, GPUs, and otherwise. So that may offset some of the software delay that people have to deal with from these new NVIDIA offerings. It may also build demand for some of their older offerings that are cheaper. At the end of the day, though, I think the company can continue to kind of go on its current course. That is to say, steadily expanding market share. But I will say, personally, I am skeptical of Gen AI's ability to break out of its current ceiling, I guess you could say. And the reason for that is these large language models are just not really able to do what we would consider AI to be. That is to say, they're both basically just probability engines or stochastic parrots, linking different bits of data and trying to predict the next token or the next thing they tell you based on all those inferred probabilities. So it's not really intelligence, but it's certainly a stepping stone in that direction. So I think the moment that you start to see AI CapEx plans get pulled back, that's where a company like NVIDIA starts to see its risk grow significantly. You're also seeing things like Anthropic making a bigger investment in Google TPUs, which I do think is a big deal. It's a big deal for NVIDIA. It's a big deal for Broadcom. It's a big deal for Google. It's good for Broadcom and Google. It's not as good for NVIDIA. If you see other major AI startups take a similar step, that would also be problematic. So back to the market, seeing a bit of a pull here. Just got a headline in from the Fed's Barkin saying long-term rates today are being driven by supply and demand of U.S. Treasuries, with supply rising on larger deficits. So net, constructive on NVIDIA near term, but I do think the risks are rising. And we did see just a little bit of seller absorption down here. That red square, that was just a sign that there was someone stepping in saying, you know what, I see that you want to bid this. I'm just going to smack that bid down. And they did, but apparently not enough to discourage those buyers. So we're going to zoom out just a little bit to a longer time scale here. And to me, this still looks constructive. We made a big push higher. Now we're consolidating, accepting those higher levels. We do see some iceberg nibbling helping to push this as well. Let's take a look at our friend, the NASDAQ, as well. Very similar look. Yeah, that big push Some degree of volatility or consolidation, but overall accepting these higher price levels. Heat map is pretty similar to where it was pre-market. Nvidia and some of the semis still bid. Seeing some demand coming back into healthcare. Had a pretty rough and tumble day in healthcare yesterday. Financials pretty flat. Not a lot of continuation from the run we saw yesterday so far. And gold absolutely bid out of the gate. Look at that move. Nice continuation. Let's take a look at silver. Silver, also a similar look here. Nice bid off the opening bell. Pretty chunky little supply zone up here at 80, so that could offer some resistance. What I like to do with these supply zones is, see how price reacts. If we get right up to it and fail, that's giving you a sense that buyers don't have the demand. If you get right up to it, it gets absorbed and there's a push, that gives you a sense that there's room higher from there. It's all about auction theory for these liquidity zones. Yeah, Loki, I mean, I think at the end of the day, we're just basically throwing a sledgehammer at a problem that is like attack, where it's not necessarily the best tool for the job, the multi-purpose GPU. I think that we will see specialized circuitry become a much bigger theme this year and in the years ahead, as well as different types of training techniques and inference techniques and models that are more specialized for their use case. And all of that kind of reduces aggregate demand, which is a good thing because we don't have the sort of power that is being talked about to build all these data centers. So I think ultimately things do get more efficient. And long run, that may not be the best bull case for the pick and shovel sellers, but for the folks that are trying to build things with what may later become actual AI, that's the best case possible. And like with everything else in technology that's ever happened, things get more efficient. They get more powerful. They use less power, but they're able to produce more over time. That's sort of a tale as old as technology itself. And this will be no different. All right, let's shift back. But before we do, we're going to just take a quick look at Bitcoin as well. Bitcoin not having the same reaction as gold and silver out of the open. So-called digital gold actually selling into the open and just sort of chopping in a range here. But with all that being said, it is still impressive the run it's made off its lows. Back to the S&P, we are seeing some pressure here. Had a chunky little iceberg buy on this move lower. About 1,500 contracts purchased there. You can see that in the subchart as well, which brings our net icebergs up to positive 1743. So there is some appetite here in the S&P. When we drip lower, you've got a larger trading desk wanting to buy some of that. The order book overall balance, 17,000 on offer, 15,000 on bid. And the rally in Nvidia shares fading a bit here now, up just about 0.75%. It was up over 1.5% earlier. Tesla also fading down just about 3%. That's one of the weakest components I'm seeing in tech of the majors. And that's definitely dragging things down here. Even with healthcare rallying, And industrials, some of the industrials showing a little bit of green, defensive showing a bit of green. This weakness in tech is starting to pull down the broader market a bit. NASDAQ, you can see it even more pronounced, getting back to those pre-market levels in the NASDAQ. And some decent seller aggression on this move lower in the NASDAQ as well. It does look like buyers are trying to get back in and give this thing a second run. Especially in the S&P, that's really where I'm seeing some potential for this thing to possibly reverse here. We're going to start seeing the flows hitting for the options pretty soon as well. We can zoom out and see some of the levels the SPX options visualizer has identified. This put wall down here just around 69.42, that's going to be a large area of potential support. We wouldn't want to see us break down below there. If you can see the buyer aggression under the session range volume profile, those deltas are areas that buyers would want to defend. And if we cut down below them too much, you're likely to see them become motivated sellers because they're on the wrong side of that trade. So we're starting to see some of that defense of those levels here. Seeing a little bit of a bid come off that confluence level between the point of control and VWAP. And we don't have a particularly impressive 20-minute opening range here. About 9 handles, which I like to see 12 or above. And we just got our data from S&P Services coming in lower than expected, 52.5 versus an expectation of 52.9. And so, if you're of the mind that the Fed's got to cut and we've got to have weak data to encourage Fed cuts, then this is good news for that camp, which is probably one reason we're seeing a somewhat illiquid bid in this liquidity vacuum. You can see the heat map really turns dark ahead of these events because there's not a lot of liquidity. It's starting to come back now. So we're starting to make a push above where we had been trading, that trading range. If you're looking at this from the vantage point of a 15-minute opening range, you could say you're starting to break out of that. I do like to look at the 20-minute opening range, so we still have a little more time to fill that in. But it's looking better as an opening range. Now we're pushing to about 10 handles, 10 and a half. Again, I'd like to see 12 or higher, ideally 15 or higher. So let's see if we can get to that point before 9:50. Nice move here. And this is exactly the type of opening range we were looking for. Got about 16 handles. Pretty big stop run. Sellers getting absolutely pummeled here. And we're starting to see some of this options flow come in. Right now, it's pretty balanced. And this is an aggressive push by buyers here. You can see that in the delta volume candles below. Also, order book is starting to shift more towards the favor of buyers, a delta of about 2.6 thousand, 17 versus 15,000 on bid versus offer. Of course, I'd like to see the order flow continue to improve on the call side. Starting to see a little bit of that. Hot call now at 4,000 versus 3,000 on the hot put. That's just one measure of volume. We also can see gamma 2 up there, which tends to be a pretty magnetic level. That's this basically the third largest level of gross gamma exposure on the S&P options chain. So likely that we get pulled into that level. And we've got pretty good support below us at around 6,900 cash. That's an area that I would suggest is today's put wall to watch. And we're getting right up to the most active call strike already in this tape. I think that this trading day could be pretty dynamic. One thing that's interesting about Tuesdays as well is you do have the potential for double breaks. It's about a 60% chance that you have a double break, which means you could break to the top of the opening range and then break to the bottom. So that's one thing to keep in mind. It's one reason that Tuesdays can be a little bit more tumultuous. But if you're trading this just as a scalper or even a trend trader, this day is shaping up to be pretty appetizing. My thought is we can continue to move higher here, and I think that this initial run suggests there's a fair amount of institutional demand at the margins. But we saw them buying dips earlier, that 1,500 iceberg. We were getting down to the point of control. One of those desks stepped in and hit that bid pretty heavy. And we are seeing the hot call and warm call levels pick up from here. 5,000 on the hot call, 4,000 on the warm call versus 4,000 on the hot put and 3,000 on the warm put. So again, the options flow itself, add that to the trend that we're seeing, that suggests we could move higher. The next thing I'd like to see is the warm calls flow exceed that of the hot calls, suggesting that price could move further up from here. We are getting close to a area where we may see some resistance, just one of the intraday pivots around 68.25. That's 69, 68.25 on ES. And we are seeing that flow pick up. Warm call now 5,000 like the hot call. Looks like we're going to roll higher here. So that suggests we could get a little bit of expansion if we're able to take out that resistance level, 68.25. We should get right up to what is now the warm call and likely to become the hot call if this roll up continues of flow. So overall, everything we're seeing is pretty bullish. Looking at the heat map now, NVIDIA's off its lows, now trading up 2%, Micron up 6.5%. Tesla's still down about 3% here, but the semiconductors are having a great day. Healthcare is having a great day. Bit of a mixed bid in the industrials and basic materials. Financials and consumer defensives mostly flat to a bit down. And Trump will be speaking at a GOP event at 10 a.m. Eastern. So you do have an increase of headline risk, although, again, and maybe this will be like a famous last words moment for me, but we have seen the response function of the markets diminish for what Trump has been saying. Remember the first quarter of 2025, how the market was hanging on to his every word and moving up and down, sometimes even double digits of percent on the things he was saying and doing. We're long seemingly past that era. Looking at it in the rearview mirror, it's almost a little amazing to remember what it was like then versus now, where the market often shrugs off what he's saying, which is a good thing for us, but the contrast between then and now is remarkable. And we're continuing to see flow build in these call strikes. The hot call still leading at 6,000 on that gamma 2 level, which could be, again, a bit of a magnet. But I do think we're going to make that push higher here. Seeing a little more seller aggression come in. Order book still favors the buyers 18,000 to 15,000 bid versus offer. And we're looking at all of those across the order book, including those you may not be able to see because they're further zoomed out than the screen. And speaking of zooming out, that is one thing you can do to see all the levels in the SPX options visualizer on screen as well. So we are in positive gamma territory. We're starting to push more into it, which means that there is a change in how the dealers interact with the market. That is to say, now rallies are more likely to see some selling into them. Dips are more likely to see some buying into them. So it's a volatility compression regime the further you get into positive gamma here. Could see there's some confluence with the vol trigger and the point of control. That's another reason I think we saw that big buy earlier. Buyers know that if you really do push below this point of control here with this setup, you've got the point of control, VWAP, and vol trig around the same level. That could lead to a pretty pronounced continuation lower. So that's a big level to watch in today's tape. Let's take a look at gold and silver here as we wrap up. Gold continuing to push to new session highs, taking out an offer at 4,500. Starting to see a bid come in just a little bit lower than that. And silver also setting new session highs recently, breaking above $80. You love to see it. That shakeout that we were talking about pre-market open of gold and silver, seeing that period of volatility, knocking out the specs, resetting the skew on the options, all of that's constructive for a continued move higher, and that's exactly what we're seeing. And S&P getting up to that pivot at 68.25 and starting to take it out here. This is good. This is exactly what you want to see. Basically giving you a sense that buyers continue to have the demand to push this thing higher. And we're still seeing that flow continue to build. It's really healthy price action here, mostly driven by both the initial trend, the buyers showing aggression, and then continuing to be fed in by these options flows. Options are a big part of what move these markets. The SPX index options, or the S&P 500 cash index options, trade about 1.3 trillion notional every single day. That's far larger than all the equity futures contracts notional trading value combined. About 4 times more. And about 60% of those SPX options are trading to expire the same day, 80% within the same trading week. It's incredible, really. The tail wags the dog now, which is one of the reasons that I watch options flow pretty carefully. And we could see the order book also tilting to favor the buyers even more. 19,000 versus 14,000 bid to offer. Very constructive look. Suggests we can continue to push higher from here. And again, I'd love to see that warm call flow exceed that of the hot call. I think that's what we need for that extra push. We are getting a little bit stuck in Gamma 2 here. Sellers are trying to give it another go here, showing a little bit more aggression up here. And folks, I want to thank you all for tuning in. If you'd like to learn more about what I do at Traderade, visit traderade.com. You get up 20% off using the code Mayhem20 at checkout. And visit traderade.com/bookmap and scroll down to the bottom, special offers to get up to 40% off. I'll be back next week, Tuesday at 9 a.m. Eastern for the next episode of Back to the Futures with me, Markets and Mayhem. But for now, looking for this thing to continue to consolidate and then make a move higher. Overall, very bullish price action setup for today. Thank you all for tuning in. I'll catch you soon.